All right, hello and welcome everyone to another edition of Market Trading with your host, Tom Vays. But today we're going to have a very, very different show. I haven't done interviews on this channel in a long time, and it's a pleasure for me to host David Poole and Andreas Valencia. David is at ARKInvest. Andreas is at 21 Shares. The company's a kind of partner, but I'm going to let them do an intro and explain all that. And we are going to take about an hour to talk about the ETF that was launched through ARKInvest. And we're going to, break that down along with what's going on in our current sector. How are you today, guys?
Doing great, Tone. I appreciate the invite.
Same here. Thanks for the invite.
Thank you. Andreas, you and I are meeting for the first time. David and I go back, way back, probably about 5+ years, and lots of mutual friends in common. So it's great to have you back on the channel. You've been on this channel before. I'm going to let you guys do your intros. I guess, David, you've been on the show before. Go ahead and tell us what you've been up to in the last 4 years since the last time you've been on the channel.
So working as research associate in ARKInvest in the digital assets team, mostly delving into on-chain analysis. I've been with the company for 2 years now, supporting in the research and product development side.
All right, Andreas, go for it.
Yeah. So thanks for having me again. So I'm Andres. I am the VP of Financial Products here at 21 Shares. I basically manage the portfolio management, trading, and operations teams here at the company. Been here about 3 years, and as far as what we've been up to in the last 3 years, it's been quite a lot. We've launched 30+ ETFs in the European space, including the 5 40 Act products and the Bitcoin ETF we just launched in partnership with ARK.
All right, so let's tackle the little bit of confusion that even I have. Can you guys explain the relationship between 21 Shares and ARKInvest and what that is and how it functions?
Definitely. David, do you want me to take this one?
Yeah, go for it.
Yeah, definitely. So I think the first thing is Kathy is a member of our board at 21 Shares. Our partnerships, our relationship basically extends quite some time. I think about 5 years at this point. We basically partner to bring together the expertise of both companies as it relates to cryptocurrency. As I mentioned before, 21 Shares, we've been in the market 5+ years at this point. We've launched 40+ ETPs in the European space, and ARK is well renowned for the research, particularly in crypto, dating back to, I believe, 2015. So it's quite some time. What we look to do is kind of combine our expertise as it relates to management of crypto products in an ETF wrapper. So that's best of both worlds.
All right. So 21 Shares is actually responsible for launching the ARKB ETF then.
Yeah, we launched it in partnership. We've done a lot of the setup work and getting this out there. A lot of support from ARK. So I wouldn't say that it's only our effort. So.
All right, and here is the website for ARKInvest. Now, what I've been doing over the last week or so is I've been trying to just keep up with the data manually. So I have the links to all the ETFs and how many Bitcoins they are holding and acquiring on a daily basis, along with how many shares are being issued, making sure that the numbers tie out between the market cap of the ETF and the market value of the shares. This link is publicly available. It's been tweeted out by the Financial Summit handle as well. So you guys can click on these links to the ARK ETF in order to see those numbers for yourself. Okay, I actually prepared some questions because I was happy to get you guys on, and I know there is regulation, so we have to be careful about what we ask and how it gets answered. So let's start with what was the process like dealing with the SEC to get the spot ETFs approved? The SEC eventually approved 10 ETFs at the same time. I've been saying since 2013 or 2017 when the first ETF was rejected, the Winklevi Twins ETF. And I've always been saying that the SEC is so reluctant to allow the Bitcoin ETFs. One of the reasons is still immaturity in the crypto space. They always fear that there's manipulation of the underlying Bitcoin, probably custodian issues that the SEC had. Those issues are probably a little bit better now that it's 2024, not 2017. And Coinbase Custody is like one of the main custodians, though other Bitcoin ETFs are holding it themselves. Their other big concern, or at least what I thought would be the concern, is that once you allow a Bitcoin ETF, you open the door to all kinds of, questionable altcoin ETFs. So what was it like dealing with the SEC, and what was their biggest concern for allowing a company like ARK to launch an ETF? And ARK is fairly new, and 21 Shares is fairly new, not like iShares that have experience, right? I'm going to leave it there, and I'll let you guys answer.
Well, I think the important thing to highlight there is that this is something that's gotten a lot of attention recently in the last couple of months. This is something that we've both been working on for years, I think 2+ years at this point, on getting this ETF approved. In terms of the role of the SEC, I think that it's clear that they have a role where they want to protect investors, and us as issuers, as sponsors, we need to kind of work with them to understand all the roadblocks to actually getting this out. They did have a lot of issues with, particularly what you mentioned, just getting Bitcoin into an ETF wrapper on the mainstream investment platforms, and I think some of that got resolved through a way where they weren't expecting it to. But beyond that, I think that a lot of the issues that we uncovered with them were more so operational and related to exposure. Meaning that because everybody is not in a position to trade Bitcoin, and talking about institutional counterparties, they wanted to ensure that anybody that had exposure to Bitcoin was rightfully prepared to deal with that exposure, if that makes sense. So a lot of it had to do with the model that we were proposing. I think that everybody in the ETF space, the crypto ETF space, was a very strong proponent of the in-kind model, which is traditionally what we run on our products. It was a lot of I don't want to say convincing, but a lot of us showing what our proposal is in terms of those operating models to make sure that everybody was comfortable with them. It's ultimately what you end up seeing today with all the cash creations within all these Bitcoin ETFs.
All right. So let's go into the competitive advantage of your ETF versus others. I don't know if I want to. I have my favorites in the space. I know we have mutual friends in the space that are also that have launched ETFs. I'm not going to name names of competitors, but what is your competitive advantage versus some of the other ones? You guys on the liquidity side of things, I believe you guys have like the fourth or fifth highest liquidity out of all the other ETFs. So right there in between, maybe slightly higher than the middle area. So what competitive advantage do you guys bring?
It's a proven model, right? This is not something that we're doing from scratch. We've been doing this for years. The EMEA space has been there for 5+ years. We were the first to launch not a Bitcoin, but it was an index fund in the European space. So we've borrowed a lot of the best practices that we've established over the years in running this product. How we handle cold storage. There's something very important that Ophelia likes to highlight. It's everybody has access to the same tools. Everybody's using Coinbase. What it comes down to is how you basically use the tools. That completely varies. We are a crypto native firm. And ARK is also a deep believer in crypto. They analyze the blockchain. That's the same approach that we take when we look at our products. So an example of that is when we do reconciliations, we're looking at blockchain level data to ensure that the crypto is actually in the wallets that basically support the ETF. That's something that not everybody's doing. From a fund admin space, you rely a lot on APIs that connect directly to the Coinbase, and you're able to actually look at Coinbase balances, but not necessarily on-chain balances. So that's one of the differentiators.
Yeah, and thanks for being transparent. You guys publish the amount of Bitcoin every day on your website, along with the amount of shares outstanding, hence multiplying the amount of shares outstanding by the closing price. We get the net asset, we get the market cap of the ETF itself, and you can compare that to the number of Bitcoins that is being held, multiplied by the price of the Bitcoin, and the market value of the Bitcoin tends to add up to the market cap of the ETF, which is what the spot ETFs are supposed to do. But as you mentioned, transparency, some of your competitors, though not all, do publish the actual public key of the Bitcoin address that Bitcoin is going into, so that even regular people like myself and others can just literally look at the on-chain data to verify that Bitcoin's coming in. I believe you guys are not doing that yet. But is there a plan for that, or something similar to kind of prove reserves? And I know this question you may not be able to answer, but I had to ask it.
Definitely, though. We are working on something very interesting for the native crypto folks. We're working on a proof of reserve system right now. The reason, just to go a bit deeper, the reason we don't publish addresses directly is because of security reasons. There are dusting concerns around publishing public addresses for a public product. But we are working on something very interesting, and you'll see it soon.
All right. Yep, that's as good of an answer as we'll get. And also sticking with that theme of proof of reserves, you guys are using Coinbase custody as the custodian for the ETFs. Is that the only one? Do you know if there's plans to do self-custody like some others? I know your European products use multiple custodians, but right now it's only Coinbase, and it's probably going to stay that way for a little while. Definitely,
yeah, definitely not self-custody. Basically, I think there's a reassurance of using third parties and actually managing the assets off of these regulated products. But definitely, I mean, if you look at your European products, we use a multitude of different custodians. We have the relationships. It's something that we look as a best practice in diversifying that at some point.
Okay, and all right, maybe David, let's get you in here. So the big quasi ETF that we had for a while that got converted into a spot ETF was, of course, GBTC. And with the SEC not allowing in-kind transfer and making it in cash, they're forcing GBTC to buy Bitcoin on the open market. They can't just transfer the Bitcoin they have. And what I actually did, and everyone that watches my channel knew what I ended up doing, I actually ended up selling 75% of my GBTC position because I was holding GBTC in my retirement account. I got out right before the day before the ETFs were approved. I'm looking to get back in. I've already converted the majority of the remaining 25% into other Bitcoin ETFs. It looks like many people are doing the same. There's massive bleeding happening in GBTC. Again, I'm trying to keep track of this data daily. Their next number is going to come out. They are selling off over 10,000 Bitcoin every single day. And I believe they were not prepared for this kind of exodus. And I think a lot of this Bitcoin is being sold on the spot markets, driving the Bitcoin lower because all these other ETFs are purchasing Bitcoin. And I don't know if you guys can get into how the Bitcoin is being acquired, but David, what do you see happening with GBTC? Because you are one of the lead analysts over at ARK in the crypto space. Well, what do you see for GBTC?
Yeah, I think this is one of the outcomes of having two factors. One, settlement in kind not being available for clients, and on top of that, some of the hype that was related to the ETF announcement was kind of a sell in the news. It tends to be a rule of the market that it corrects after any hype goes to a climax. This was no exception. So I think a combination of both factors set up the incentive so that having a no-in-kind settlement and GBTC maintaining relatively high fees, it created the incentives to massive outflows, as we've seen in the last couple of weeks, more or less. I know another one of the incentives was FTX, the FTX estate being one of the primary sellers of that, which has been confirmed in the news cycle yesterday, I believe. I think they unloaded more or less $1 billion USD. So all of that pretty much made up the perfect storm to cause this price deviation. Regardless of that, we're seeing a lot of healthy inflows into the other products, which with cheaper fees structures. So we believe that this is pretty much what could be aligned to a local correction within a more healthier primary bullish trend, right?
All right, so let's go back to the Bitcoin being purchased, right? So if I jump back over to my spreadsheet, as of the latest data that I have, ARK has purchased over 10,000 Bitcoin that you guys are holding. So how does it work really? When you guys purchase the Bitcoin, does it take multiple days to settle? Is it done within the same day? So right now I have it listed. If I go to the website, if I go to 21 shares, and I see the number right down here. This is as of January 2022. This number is posted in the mornings. So this is as of yesterday afternoon. This is how much Bitcoin was in cold storage belonging to backing the ETF. And from day to day, from one day to the next, it looks like about 1,600 was purchased in 24 hours. Can you just talk about that, how that process works? Do you guys buy it on the open market on the spot price? Do you use other entities other than Coinbase? You don't have to give names. Did you guys go into partnerships with certain high net worth Bitcoin holders that you're going to be a big buyer? Were there futures contracts involved? How does the whole process work? I mean, I know I'm dying to know because I have no idea.
I can take this one, David. So the simpler the model, the better. This is, again, one of the things that we've carried over from our existing business. We do have multiple institutional trading relationships that we've established over the years and been able to lower spreads on our trading, on how we actually execute. These trades, essentially, they're all T+1. They're all done to minimize slippage on our product. So as a product, we calculate our NAV using the BRRNY, so the CF benchmarks Bitcoin valuation that's also used by the CME. When we trade, we're typically tracking that benchmark. So we're quoting our partners, our institutional trading partners, to give us best execution based on that price. So we're doing a bit of an auction, if you will, just to get the lowest price. Now, the important thing to note there is that this execution cost is not actually passed back to investors. This is actually passed back to the AP that actually creates that. So there is no impact on net asset valuation as a result of any trading. You'll see them reflected in spreads on the secondary market, but due to how tight we actually execute, and it's a pretty impressive slippage that we've been able to maintain, you'll see those tighter margins on the secondary exchange.
So can you just be a little more specific? Because you used a lot of acronyms like AP and T+1, and I'm sure this is still very confusing for a lot of audience. And kind of even myself, being I've been a trader for 20 years and I've worked at MSCI, which makes indices that are then turned into ETFs by companies like yours. But as far as this kind of stuff, and I'm very familiar with options markets and futures markets because I traded them. But it sounds like you guys are always a day behind, right? You see where things are being traded, and then you put in those businesses to the future, or is it the other way? You guys are a day ahead, and you're anticipating what you're going to need, and you're putting in those orders.
So in our ETF market, we basically manage, there's two markets that exist essentially. There's the primary market and the secondary. So secondary is where people normally buy the shares on exchange, on the brokerage. That's essentially the secondary market.
Okay, yeah, I refer to that as like the spot exchange. Like you have to go and sell on the spot markets.
Exactly. So when we transact on the primary market. So we're only facing off what's called authorized participants. So authorized participants are your large broker dealers, are the ones that interact basically and create the markets for the secondary markets. When they interact with us, they're buying shares in blocks, and they're giving us dollars. What we give the broker dealers, the APs, is essentially trade date execution. We execute basically at our benchmark, which is basically calculated at 4 p.m. Our goal as we trade into these is basically to minimize that slippage or the price difference between that 4 p.m. price where the ETF tracks versus the price that we actually get on the market. So that's the entire goal of how we approach our execution model.
Okay. Are you able to say what kind of blocks they are? 100 Bitcoin blocks, 1,000 Bitcoin blocks?
Yeah, of course. So our blocks, we trade in increments of 5,000 shares. It's equivalent to 5 BTC. So you'll see like basically all our trading that happens on the primary market. And if you look at our holdings, you'll see that they're whole numbers. This is of course during the duration of our fee waiver during the product. That's why you see these whole numbers on the holdings report.
Okay, gotcha. And but if your APs, basically these are like the big OTC sellers or the big exchanges like Coinbase that have connections to large holders of Bitcoin willing to sell. If they know you're going to be executing at 4 p.m. And they know whether there was inflow or outflow into the ETF, wouldn't they have knowledge of you're going to come to them and how much Bitcoin you're planning to buy? Wouldn't they be able to take advantage of that, or is there some kind of contract that prevents that?
Well, yeah, that's definitely it's not an accepted practice in the industry, especially in institutional players. Definitely no firm running trades. Moreover, so we're executing our price is not the benchmark price that we're trading is not a spot price. It has the advantages that you don't have to trade at a specific price. Trades are agreed upon well in advance as well. So when you actually enter a trade, this is happening hours before the close. And the reason for that is because the best access is dependent on the actual slippage, not how the counterparty actually executes. So in other words, the way that we manage this is the counterparties are taking risk on our trades. We are tightening our spreads by essentially guaranteeing a benchmark price on our side. So the CF benchmark price that we track, plus or minus some type of slippage.
All right, so let's talk about the future a little bit. This is the first batch of spot ETFs. You guys and several others have had future ETFs, and there are also products in other countries, but the US is, the primary and most liquid market where all the money is. Do you guys have anything in line? Do you already have applications with the SEC for future ETFs? And what else are you thinking? Like what kind of other crypto related products on the traditional markets are you looking to launch?
That's a great question. We do have an ETH spot filing. I don't think that I could say much more than that, but we are looking forward to that. I think our product line in Europe is an indication of what we look to do. We look to provide a broad exposure of crypto in the form of ETPs, ETFs. So we look forward to growing that in the future. No plans to disclose right now. What I can share is the 40 Act products that we launched in partnership with ARK, with David. We did launch ARKA, which is essentially futures-based Bitcoin exposure product. It's essentially launched back in November. We launched ARKZ, which is Ethereum futures-based ETF, and a couple of others, which I'll leave to David to describe. ARKC.
Yeah, but the strategy consists on taking advantage of the on-chain mechanics, delving into the inner economics of Bitcoin at any given time. To be specific, the core model amongst the whole quantitative and discretionary mechanism that we apply to the strategy. The central model is MVRV, which I know you're familiar with, Tone, or market value to realized value ratio, going way back in 2018. That is basically the ratio where you divide market capitalization between realized capitalization, meaning the last instead of counting the coins at the time where at the current price, you're counting them at the price where they last moved. So in aggregate, you get a general sense of cost basis of the market. So by measuring current price against the cost basis, you get a sense of overvaluation or undervaluation, historically speaking. On that, and with other quantitative and discretionary models we have, we take low throughput, high level intra-cyclical decisions that ultimately aim to make for a capital preservation strategy for clients, meaning trying to ride the bull as much as possible and avoid the bear as much as possible.
Yeah, we do have the other two strategies as well. So ARKB, which is focused on the blockchain. David, do you want to explain that one as well?
I think you meant another one.
Do you want to go into ARKY first?
That strategy delves into aims to outperform market cap weighted portfolio between Bitcoin and Ethereum. The idea is to the core model. It's called a relative profitability model that measures the percentage supply and profit of Bitcoin against the percentage supply and profit of Ethereum at all times, and gets a sense of the momentum of both assets relative to each other, suggesting if the market prefers Ethereum or Bitcoin at any given time, and allocates accordingly.
I'm just looking. I'm looking it up. I'm not really familiar with it, but interesting. So here's the daily chart, and but it dropped, right? So at the moment, the market is not preferring either of them, right?
The strategy of focus on to crypto assets and crypto exposure is what the strategy aims to provide. So yeah, it's going to be correlated to crypto for sure.
Yeah, it looks like I have to be more familiar with so many of these ARK products. I didn't actually realize ARK had so many. So getting back to David, since ARK did start out before anything crypto related with their tech ETFs and others, how much focus is ARK giving to the crypto space versus the traditional? Because I'm sure when the company started, there wasn't a single hire that was doing research in crypto, and you've been there 2 years now. How have you seen that division of ARK growing, and is the crypto side of the business going to overtake all their other sides of business combined? What's the relationship like? And I'm sure you know Cathie Wood and other senior management there. What is their view on the Bitcoin space or the crypto space in general? Is it just, oh, we're going to launch an ETF to make money, kind of like BlackRock thinks? They don't really care about Bitcoin. I know they don't. But over at ARK, I'm sure it's a little bit different. Just like some of the other guys like Fidelity, I know they care about Bitcoin. What's the relationship like at ARK, and how much focus is being given to it?
Yeah, that's actually a great question. So I'll start off by saying 21 shares is 24/7 from inception, right? On the ARK side, to give you context, since inception, Kathy and Brett, our chief futurist, former director of research, they pretty much launched ARK with the intent of capturing exponential curves in the market, especially those related to disruptive innovation or that concept in general. And for that, they platformed from the get-go 5 platforms, or what we call platform technologies. Those 5 platforms are artificial intelligence, robotics, energy storage, gene sequencing, and blockchain, public blockchains. So it's at the very least as important 1 out of 5 for the whole company. And that's the regard we have for this technology and the hopes we have for it into the future. To give you context, between the US and Europe, I think ARK is between 60 or 70 employees at this point. And the crypto team is about 5 people. This includes, legal, compliance, finance, marketing, the whole team. So about 5 people today comprise the crypto team, led by Yassine El-Mandria, the director of digital assets, Frank Downing, who covers, he's the director of next generation internet, but also deeply involved in crypto research. Weyhan, who handles crypto investments, myself, and of course the team is also growing. We don't expect it to stop. Pretty much just to say that from the get-go, not just from a year ago or when we started planning launching products related to Bitcoin or else, we always saw public blockchains as one of the main disruptors. To give you a sense of internet 30 years ago, or electricity, the telephone, more than a century ago. That's how we see it, basically.
All right, and so you're the lead researcher on, I guess, the crypto industry over there across.
No. That would be Yassine. That would be Yassine. I'm the, let's say, I mostly delve into market analysis and on-chain research related to
okay, so
Bitcoin.
you stick specific to Bitcoin, not the entire.
Most of my coverage is Bitcoin, but also delve into other assets.
Oh, okay. When's your next report coming out? I know your last one was like 100 pages long.
Yeah. We had a Cointime Economics, a massive research piece published with Glassnode last year. There's 2 versions actually. The friendlier one is 15 pages or so. The 120-page long version, that's through Glassnode, but I think it serves for different purposes and different audiences. We have the Bitcoin Monthly that comes out every month, obviously, after a few days after the close of the month, where we delve into the on-chain and the macro side of things, proportional to how they relate to Bitcoin. And yeah, we have several research pieces, one of them upcoming with the 21 shares in perhaps a few weeks or a few months, and then a few others during this year where we want to push a lot of the crypto native research into the traditional world.
All right, sounds good. All right, guys, I am done with my questions. We'll see. Maybe the live audience has something interesting that you guys would be able to answer. Otherwise, is there anything we didn't cover? Anything else you want to say? Either of you?
Andres, I know you guys have also some deep level research on your own. Perhaps you want to mention some of that.
Yeah, definitely. I mean, research is a big focus of ours as well. I think we align the way we do research a lot to ARK. So definitely we publish periodical newsletters on our research covering various topics. Yeah, the links are available on our website. So anybody that's interested, feel free to sign up to those newsletters. They're definitely have a lot of valuable information in them.
Yeah, I think
go ahead, David.
That's kind of important to highlight the amount of manpower that both firms have invested into research for years now. To give a context of that, I think 21 Shares has is one of the top contributors of Dune Analytics in terms of on-chain analysis in that website, which is one of the major repositories of that. And on the other hand, ArkInvest, just in aggregate between what I've invented over the last few years and the research pieces we've published, well, myself since 2018 and ARK since 2015 or 16, I believe. I think we're the firm that has contributed most in terms of just native economical measurements for Bitcoin between MVRV, the Cointime Economics paper, and the like. If you go to websites like Glassnode or you know, which are like the Bloombergs of the crypto space, you see our signature in a lot of those metrics, the Paul multiple, MVRV, and dozens more. So just to highlight the level of research we have gathered and aggregated over the years between the two firms.
All right, and there actually was one more question. It came through on Twitter, but there sounds like regulation to carry that. What happens if there's any more airdrops to the Bitcoin that Coinbase is holding in custody, or perhaps another fork like what happened with the Bcash fork? What happens to those additional coins? And I think the SEC has an actual ruling on that, even though it's debatable whether they fully understand how Bitcoin works, but it is their rule.
Definitely, we're not allowed to participate in airdrops and forks, unfortunately. It's one of the provisions within the 33 Act products, unfortunately. But separate to that, Coinbase does have their own policies on how they actually support these. So a lot of the ability to capture these depends on the policy of the custodians as well, separate from SEC regulation.
Yeah, it will be interesting if that kind of situation happens again. I personally don't expect another Bcash fork situation, but I will add that Coinbase handled it pretty poorly back then. So hopefully they learned their lessons, as they are somewhat entrusted by most custodians to hold on to their Bitcoin. All right, guys, any closing thoughts? Otherwise, we're going to wrap it up. I know a lot of my viewers wanted to listen to the price analysis. Guys, those videos are now every morning on the Financial Summit YouTube channel, where I've moved a lot of my trading content. I will do another video on this channel probably tomorrow. I don't know if I'm up for a third video today. And we're going to talk about the price of Bitcoin a little bit more. So get ready for that video tomorrow. It looks like we are in a little bit of a bounce. I don't know if you can comment on the price of Bitcoin, David, like back in the day before you were working for ARK. But if you are allowed to say where you think the price of Bitcoin is going, I'm happy to pull up the chart and we can take a look.
Yeah, and instead of price direction, I'll provide. How about I plug the Bitcoin monthly, and we can go through a few charts on that. The last Bitcoin monthly.
Bitcoin monthly.
Yeah, you can Google Bitcoin monthly ArkInvest and it should come up.
Oh, okay, I got it. So the report you guys put out.
Yeah, I think that's still relevant. We have corrected since then, but there were some on-chain signs. Not specifically GBTC, but perhaps let's go through a chart or two. Yeah, December.
Oh yeah, no, that'd be great. In fact, maybe we can have you on once a month right after this report is published to just go through. I have to download the PDF, right?
Yeah, should open right away. Yeah, that's it.
Yeah, just to go through the on-chain analysis charts. That would be awesome.
Yeah, so this is our Bitcoin monthly. If we go through the next, you'll see the charts upcoming. Yeah, this is just summary and
there we go.
Yeah, we can go to the second, that one.
All right.
Yeah, so
let me zoom this bad boy in here. Okay, here we go.
Yeah, so basically this is like the 30-day % change of long-term holder supply. The long-term holder supply is defined in the on-chain world as the balance, the number of Bitcoins that have not moved in the last 155 days or more. And the reason that time horizon is important is because Glassnode did some research on where do you find a Lindy effect in the dormancy of coins in the Bitcoin network at any given time. And for the most part, they found that level of between 5 and 6 months, it's a good demarcation line, statistically speaking, where the likelihood or the probability of a Bitcoin being moved into the future drops substantially. So let's say drops into the 3%, 4% area. That's a great discovery in terms of how Bitcoin has worked economically of the last decade or more. Meaning the coins have a Lindy effect. The longer it stays unmoved, the more likelihood for that coin to remain unmoved as well. Just talking about the holder base and how entities, and by entities I mean individuals and also companies, they always have the incentives to hoard it, and therefore incentivize a sort of supply shock in the economics of it. What you're seeing here is the supply that hasn't moved in the last 55 days, and the 30-day change of it, as you see in the very in the right hand side of the chart. There has been a net outflows in the last 30 days. This is as of December 31st, of course. But in general, long-term holders of Bitcoin in aggregate have been taking profits even before the announcement of the, or at the time, at the very least, of the spot ETF. So I believe like there was a lot of actors liquidated in Bitcoins even before GBTC, setting the stage for some correction. And then, GBTC putting the pedal on that a little bit.
All right. Let's go to the next one.
Yeah, this is a
Similar.
vaulted supply. Similar idea. It's measured differently. So this is measured on a coin time basis. It aggregates all of the coins in the network and gets a mathematical sense of which coins have moved in all the history of Bitcoin, economically speaking. So it divides the Bitcoin supply into vaulted supply with a gold-like reference of that, and the active supply. The vaulted supply today is about 40% of the Bitcoin stack, and historically has trended in that level for pretty much 2 years, almost 3 years now. So what it does is basically measures the economical state and the holding behavior, but not only on the 155 days, but the whole supply. Excuse me, I'm coughing up a little bit. So what you're seeing here is that on a more global scale, we don't see those outflows in this chart. Conversely to the other one, being low means that most coins in aggregate are staying dormant relative to the last 90 days. So in more global terms and in a longer time horizon, we're still seeing a lot of holding behavior. And when you combine both charts, you pretty much get what we're looking at right now in terms of price action, which is a local correction in a more global bullish primary trend.
All right, cool. Oh, in case anyone's wondering, this report was published and available as of January 8th. So it's a little over 10 days old, still pretty relevant. All right, the percent of Bitcoin in profit hit 90% in December. Usually when that happens, yeah, there was a little bit of a sell-off, but prices tend to go higher a little bit and tends to stay up there quite a while before eventually it exhausts.
Yeah, this metric, of course, when Bitcoin goes to all-time high, it's going to read as 100%, obviously. The major takeaway from that chart is that if you compare the last time that the network was 90% profitable in terms of price to now, it's a very different price level, meaning that the churn we had. Like a lot of people churn the coins at the bottom, right? So it redistributes the coins at a lower cost basis, and when the price goes back up again, people are much more in profit than the last time when the bear market was just beginning.
Speculation being increased offshore futures markets. Oh, wow. I did not notice that spike. I did do a show about on-chain analysis a little while ago, but that's a nice little spike right there.
Yeah, this is more derivatives market. So trying to get the aggregate of this is a lot of offshore. So Binance, I believe they're a bit, not sure about the other ones, top of my head. But yeah, you see a massive spike in contango. I mean, historically speaking, normal backwardation is much healthier state of the derivatives market for Bitcoin. So
right.
I guess Ugly Old Goat can would have a much more robust take on that than me.
Yeah, I gotta check in with him, see what's going on. Oh, wow, are these Solana fees?
Yeah, spiking
That's
with price.
actually really funny. Everyone always talks about how cheap the transaction fees on their alternative blockchains are when no one uses them. But the moment somebody starts using them, they realize that scaling is actually a problem.
It's part of the course.
Yeah, in theory, there is never a problem. All right, I don't know how much more time you have to go through a few more.
I actually have to drop soon, but you know.
Yeah, we're gonna drop off after in less than 60 minutes. Is there any one additional chart you want to mention?
For now, I'll keep it on as cliffhanger for the people who want to check it out. It's published a few days after every monthly close, so check it out. It gives a good background on-chain analysis, derivatives market, and macro as well.
Wait, I'm sorry, what does?
And macro.
No. Like,
yeah, Bitcoin Monthly goes through on-chain analysis.
Oh, the Bitcoin Monthly. Okay, these reports. Yeah. Yeah, guys, go ahead and check them out. Looks like this is completely free over on ArkInvest, and that was one specific report. And let me go back, and then you can see all their prior reports as well. All right. And once again, follow David if you have not. Andres, I don't have your Twitter handle. I don't know if you're on Twitter. We can pull it up so people can follow you as well.
I do. It's Andres 21S.
Right there?
Nope. I might have gotten it wrong. It might have been. Give me a second. I'm not too active on Twitter, so
clearly.
He's doing all the trades. Operating.
Sorry, it's Andres 21 Co.
21 CO.
There you go.
All right, there you are. All right, you guys can follow Andres as well. Yep, clearly not super active. But hey, maybe it's a reason to start. But yeah, check it out. Or you guys can follow 21 Shares themselves. I probably should myself. And thank you guys for joining. I'm gonna cut off screen share. Thanks for asking some of the questions, and glad you guys were able to come on.
Thanks, Tone. Thanks for the invite again. Appreciate it.
Thank you.
All right, awesome. Thanks so much, and thank you everyone for joining. Catch me tomorrow morning. Oh, sorry. Let me just really quickly go back to screen share to show people where they can find my videos these days. They are over on the Financial Summit YouTube channel. It's very easy. Just type the Financial Summit or search for Financial Summit. All the videos are there every morning. I'll still do some price analysis and bring you cool interviews on this channel every now and then. But my views on the financial market have been migrated over to the Financial Summit channel. All right. Thank you so much for watching, and I will see you all